Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, May 13th. We got a bunch of economic news to go over today. We're going to jump right into it. We'll start off with the NFIB Small Index Business Index, for the month of April. So this is basically the confidence level for the small businesses, which is important because it kind of helps us gauge as to what they're seeing as small businesses as a joined together make up the largest portion out there, and this can really reflect into the jobs. So back in March, we had a 93.4 in the rating, and as you can see, it jumped up to 95.2. So that's actually a very good sign. This is a high impact one because businesses that are kind of the front line, and these small businesses are the front line, and they're seeing an improvement. They're feeling a little bit more comfortable and more confident as to where the economy is moving. So, which brings us next to the retail sales. So back in March, we had a nice spike. A lot of it was due to the late Easter, and of course the previous first quarter was getting hit, or earlier in the first quarter was getting hit with the bad storm, so it jumped up to 1.5%. So the forecast is supposed to taper down a little bit to 0.4%, and actually taper a lot more than we expected, down to 0.1%. So April is almost flat. So if you take out the big ticket items like autos, we had a 0.7% back in March, and the forecast was supposed to be a little bit less, to 0.6, and another huge miss at 0%. So basically nothing in month of April. So April is not kind to the retail sales. Now this will be important because we're just starting the second quarter, and we're kind of waiting to see as to is the economy picking up after a lackluster and very disappointing first quarter. So is second quarter going to be much better? That's why when we get towards the third quarter, like July and August, it's going to be real important to take a look at those numbers when the GDP and those things come out. So you'll see a lot more volatility in those areas because we want to see how Q2 and if it had grown, and if so, how much by how much over the first quarter, as everybody's been disappointed. So we also got the import prices index. So we had a huge increase back in March, 0.4%. So it was supposed to come down a little bit, and it came down more than expected. So basically, those gains were erased in the month of April. So basically, that means we were paying a little bit more in March for import prices and the stuff we were buying coming in, and then now we're paying a little bit less. A lot of this is due to dollar fluctuations with the different currencies out there. Now we also have business inventories for the month of March. So back in February we had 0.4%. It was supposed to go up a little bit, 0.5%, and it came in 0.4%. So could be a decent sign because even though I didn't meet the forecast, business inventories, they're still increasing inventories, which means they're expecting more sales, which could also translate to more jobs. So even though this is not high impact, it's definitely relevant in keeping an eye on as to where things are, um, you know, where the forecasting is for the economy. We got currently the stock market's up. They had a nice rally yesterday as the dollar closed up above 100. This isn't a high impact for today's news, but just kind of make note because it will kind of draw at some point where we have low news. Is that China and German data kind of came in disappointing? So, uh, of course, we keep an eye on Germany's been very good throughout the whole crisis and everything, and the economy, and they're the ones that kind of keeping Europe from falling into an abyss. China has been still declining each year, and are facing a lot of disappointments. So you got Europe, one of our biggest trade partners, as well as China probably being our biggest trade partner. If they're decreasing, how much is that going to affect us from being able to grow as a country here? So grow our economy as we need it to grow and get more jobs and put more people to work. All right, so let's go take a look at what bond market's doing. Again, I apologize. We're still going through the transition of figuring out different charts, but this is the Fannie Mae chart I can find for today. As you can see, from where we were the other day, and these are more live. These aren't just only a daily basis like we were showing on the Japanese candlesticks. But as you can see, we're seeing some improvement here. Going upwards, and this is enough to see some price improvement. We're also getting into the range where we're getting back into what we call the channel. So when we were talking before, this upward trend, when this is going up, that means rates are improving. We were down here, we kind of fell out of that, and we're working our way back in towards that channel, which means going back into a upward trend line here. So that way rates see some improvement. So right now rates are showing a little bit of improvement here, which is a good sign for us. All right. So you guys have a wonderful day. Thanks for watching. We will have a little bit more high impact news this week as well. So be prepared for a pretty busy week. All right. Have a wonderful day. And thanks again for watching.